banks close and why that's actually really good for real estate. Okay, I did a short video on this, but I wanted to do a little bit longer, and I wanted to explain exactly what that means and go into it a little bit more in depth because this is really important. And it's important to understand what's happening to our economy and where all the volatility is coming from. And so let's just dive in. Okay, so the banks collapsed. Now, how did this happen? So what happens is when you deposit money, banks go and they invest that money into different treasuries, different securities. Well, the banks like Silicon Valley, they invested in bonds, which bonds are typically really safe. But with everything going on in the market, the bonds, their interest rates have gone down. When bond rates are high, mortgage rates tend to be high. And when bond rates are lower, mortgage rates tend to go lower. So that's a good thing because that means that our interest rates are going to come back down a little bit. Now, I know there's a lot of stress and a lot of worry and a lot of concern because people just don't understand exactly like what's happening and how all this is going through. Well, in our meeting today, we listened to some clips from Harry Habib, and I've been listening to some different podcasts, and I talked to a couple different lenders because I want to make sure that I'm giving you guys the best information. I wanted to show you this graph that Barry Habib had showed us. So he talked about the formalities and the completion of home rates. Okay, so take a look at this chart. Okay, so if you look at it, starting in 2004, the formalities, so that is, formalities are families, like mom, dad, kids. Okay, those are the people that are moving into new homes. Okay, the completions are the new construction that's brought up. Okay, so you kind of see that in 2006, it drops significantly. Okay, now where is this coming from? Okay, so this is coming from birth rates, and I know this sounds weird, but hear me out for a minute. So they're saying that when we had that big drop in 2006, it's because the birth rates dropped, which as you look at this next slide, you will see that yes, that is exactly what happened. So what happened in 1976 that made, 33 years later, this huge drop in the formalities? Well, in 1976, abortion was made legal. Okay, so as you see over time, like it drops in 2006, and then it kind of, goes up just a little bit, steadies a little bit, and then it shoots back up in 2016. Okay, and you see that in 2016, more people are needing housing, right? And there is way less construction that is being built. So that means that more people need places to go. So let's talk about this and what that 33 years kind of stands for. So first-time home buyers, if they're the average of age 33. Okay, so we go back 33 years, that is what, 1990. Let's look at the birth rate from 1990. It is up there pretty significantly. And so that is the reason why we have so many people who are needing homes and not enough properties being built. I want you to look at these graphs. Okay, this is really important in how our market is going currently in Spokane and Coeur d'Alene. So as you can tell, we had lower inventory, and as our inventory went up, our prices started to trend down because that is where interest rates decided to raise up. Well, then we hit winter. Winter is always a slower time for us, and our inventory was actually fairly good during winter. But now as we're going into spring, it's coming back down again. And so what does this mean? Okay, this is the perfect storm for exactly what happened a year ago. Okay, hear me out, okay? So with all the stuff that's going on with all the banks and the bond rates going down, since mortgage rates tend to follow the bond rates, what's gonna happen? Interest rates are gonna go back down. Okay, while interest rates go back down, we're gonna have more people getting into the market to buy a home. I heard this great statistic today. Okay, when the interest rate goes down 1%, 5 million more people can get qualified for a home loan. Okay, so we're currently like in the 7s. So when we go down to 5%, that means that there will be 10 million more people in the market to buy a home. Why is that important? That is important because that is your competition. Okay, you think it's hard to get a home right now, it's going to be even worse. So as we get lower interest rates, what's going to happen to our housing prices? They're probably going to increase. I know it's not what you wanted to hear. They have gone down quite a bit, especially in the Coeur d'Alene market, 30%. Spokane, we haven't seen quite as drastic of a change. But guys, this is why it's important that we stay on top of this. And this is actually the best time to buy right now, is because if we get you under contract within the next couple of weeks, we can get you locked into a home. And there is a high likelihood that we will be able to catch that 5% interest rate as we're going into May. Guys, I would love to have a conversation with you, get you some more information about this. Comment below, send me a message, send smoke signals, whatever you need to do. I would love to have a conversation with you. And guys, I just hope you have a wonderful day, and I hope this helped you understand kind of what's going on and how, the bank's collapsing is actually kind of a good thing for real estate.